They've just revealed the entire game plan, and what's astonishing is how openly it's happening. We've spent years trying to decode the signals, reading between the lines, piecing together clues from regulators, institutions, and market behavior. But now they're not even hiding it. They are openly telling us what the future of the financial system will look like, and XRP is positioned right at the center of that transformation. What's even more fascinating is how few people actually realize what's unfolding. So many are focused on the short-term price, the daily fluctuations, the noise on social media, or the fear of missing out on quicker, easier gains. But the truth is unfolding right before our eyes, and most people are completely overlooking it. Recently, someone said that most retail XRP holders will be out of the asset long before it reaches $500. And while that might sound dramatic, I actually think it's an understatement. The majority won't even make it anywhere near that number. In fact, I believe most retail investors will exit far earlier because they're simply exhausted. They've been worn down by years of sideways price movement, by negativity in the media, by manipulation, by regulatory battles, by delays, by uncertainty, and by the emotional fatigue that naturally comes with waiting for something big to happen for so long. People underestimate how emotionally draining long-term investing can be, especially in a space as volatile and misunderstood as crypto. Before explaining when I believe most retail investors will sell, let's slow down and look carefully at what's happening in the market right now. Institutions are already positioning themselves. They're not reacting emotionally. They're not panicking during downturns. They are accumulating quietly, strategically, and aggressively. And if you follow the money, truly follow the money, not the hype, you start to see a very different story than what the average retail investor sees on a daily basis. One of the clearest signs of this shift is the explosion in XRP ETF inflows. These ETFs launched only recently, yet they've already brought in nearly $1 billion. Think about that for a moment. XRP spent years under the shadow of a regulatory lawsuit, ignored by mainstream institutions, mocked by critics, and sidelined by major exchanges. And now that the dust has settled, now that the narrative has evolved, institutions are pouring money into it with remarkable speed. XRP recorded 15 consecutive days of inflows, something unprecedented in its history. And large firms such as Grayscale and Bitwise now collectively hold about 7% of XRP's entire market cap. That level of accumulation doesn't come from hype or speculation. It comes from preparation. It comes from long-term planning. It reflects strategic confidence in XRP's role in the future financial system. And it's happening right on schedule, right as regulatory clarity begins to take shape, and right as global financial institutions begin exploring on-chain settlement, tokenization, and real-time liquidity solutions. Ripple's acquisition of G Treasury was another major step in preparing for institutional scale adoption. This wasn't just a standard business acquisition. This was a positioning move, a way to bring enterprise-level treasury operations, liquidity management, and compliance infrastructure into Ripple's ecosystem. These are exactly the tools institutions need before they can move large amounts of capital into a new financial system. It's no coincidence that institutional interest in XRP has surged immediately after Ripple expanded its capabilities into areas that banks and corporations rely on every single day. On top of that, XRP just recorded the largest weekly inflow ever, nearly $300 million in a single week. Over a 6-week period, inflows represented nearly 1/3 of all institutional XRP assets under management. That kind of concentrated accumulation suggests that institutions are not waiting for perfect clarity or perfect timing. They are positioning themselves now, long before the rest of the world catches up. Then we have Brad Garlinghouse publicly pointing out that XRP became the fastest U.S. crypto ETF to reach $1 billion in assets under management. He emphasized something crucial. The demand for regulated crypto products is enormous. Millions of everyday people who were previously locked out of crypto investing, especially through retirement accounts, now have access. This broadens the potential investor base dramatically, and it brings in long-term capital, not short-term speculative money. While this demand builds, U.S. bank CEOs are meeting with senators to discuss crypto market structure legislation. The biggest banks in the country are now sitting down with lawmakers to shape the rules that will govern digital assets. This isn't a rumor, this is reality, and it's happening right now. For years, crypto existed in the shadows, operating around traditional finance. Now, traditional finance is actively moving into crypto. The narrative has flipped completely. Many analysts from major institutions, JP Morgan, BlackRock, ARK Invest, Galaxy Digital, are predicting major moves for Bitcoin. But the real story lies beneath the surface. If institutions are this bullish on Bitcoin, what do you think they're preparing for with XRP, an asset built specifically for institutional-grade settlement, liquidity, and cross-border movement? Bitcoin is the gateway. XRP is the infrastructure. People expected 2025 to be much more explosive for crypto already. But the market faced immense macroeconomic pressure. Tariff scares, geopolitical conflicts, manipulation events, and Japan's bond yields hitting levels not seen in decades all contributed to a suppressed environment. Markets were held down artificially, but suppression never lasts forever. When pressure builds up long enough, the breakout becomes even stronger. This is why I believe most retail investors will exit XRP long before it reaches anything close to triple-digit levels. They're tired, they're anxious, they want quick returns, they've waited years and endured countless cycles of hope and disappointment. Once XRP breaks a few dollars, many will feel relieved enough to sell, even though that is precisely the moment institutions are likely to accelerate accumulation. They understand something retail doesn't. The future value of XRP is tied to utility, not hype. Once XRP becomes deeply integrated into tokenization, settlement, and liquidity rails, today's prices will look like a rounding error. Regulation has also shifted dramatically. The SEC, once the biggest obstacle to XRP's growth, is no longer blocking the path. Gary Gensler is gone, replaced by a pro-innovation stance under Paul Atkins. Caroline Pham at the CFTC is reinforcing the same direction. The barriers have been dismantled. XRP ETFs would never have launched during a hostile regulatory environment. Their approval is a signal, a green light, for large-scale institutional involvement. Now consider Paul Atkins' recent statement that all U.S. markets will be on-chain within 2 years. Stocks, bonds, treasuries, settlements, derivatives. The entire system is moving to blockchain infrastructure. Someone asked him if banks are really shifting toward tokenization. His response was immediate and confident. Absolutely, and much sooner than expected. This timeline does not mean XRP holders must wait 2 years for noticeable price movement. Historically, XRP has surged thousands of % purely on speculation, even in the absence of full-scale adoption. Now imagine what happens when speculation and real utility collide. Tokenization will bring trillions into blockchain-based markets, and XRP is uniquely suited for real-time liquidity and settlement, making it one of the key assets in this new financial architecture. The capital entering the market will dwarf anything we've seen before. The gains of previous cycles, impressive as they seemed at the time, will look tiny in comparison to the capital inflows driven by true global adoption. For years, people laughed at the idea of tokenization bringing trillions into crypto. Now it's happening openly, from BlackRock's tokenization initiatives to banking pilots, to regulatory updates in the US and Europe. Everything is aligning perfectly. This is why institutions are buying now. They don't buy after the explosion. They buy before. They buy when prices are suppressed, when uncertainty is high, and when retail is distracted or discouraged. They accumulate quietly, strategically, and across long time horizons, while retail becomes impatient and sells. This is what concerns me. Not the future of XRP, because that future is becoming clearer every day, but the fact that many people will sell too early. They'll exit before the real wave hits. They'll lose conviction at the very moment institutions increase theirs. They'll miss out on the long-term transformation because they focus on short-term emotions. Right now, we are witnessing the beginning of the digital financial revolution. It's no longer theory, it's happening in real time. Regulators are laying the groundwork, banks are stepping in, ETFs are absorbing supply, tokenization is expanding, institutions are positioning themselves. And through all of this, XRP is emerging as one of the most strategically placed assets in the entire digital ecosystem. Everything they told us for years, through partnerships, disclosures, court filings, pilot projects, and now public statements, is being confirmed. XRP was never meant to be a meme coin or a short-term speculative instrument. It was built as infrastructure. And now, the world's financial system is preparing to shift onto the rails that Ripple and the XRP ledger have spent a decade building. We are early. We are witnessing history. And once this transition reaches full scale, the opportunity we have right now will never exist again. Most people don't realize how close we actually are, and that's exactly why institutions are acting now. The window is closing, slowly but visibly. Stay patient, stay informed, and stay aware of the bigger picture. Thank you for your support. Share your thoughts below, and I'll see you in the next video.